Hi, Barbara Friedberg here, former portfolio manager and university investments instructor, here to show you how to save for retirement in your 30s and become a millionaire. When I was approaching 30, my husband and I made a big move. We went from Ohio and moved out to California so my husband could go to graduate school. We had one income, and when we got there, I was scared. His tuition was really expensive. And I was worried about how are we going to pay for his tuition and save for our future. But I went to a financial planning workshop where they talked about the miracle of compound returns and how if I start saving in the 401k plan now and put aside a small amount of money right now, then if we just continue, by the time we reach retirement age, we will have amassed $1 million. I was blown away. Long story short, we've come a long way since those times and are now approaching retirement. And the plans that we've implemented and the ones that I'm going to talk to you about today work. It's not rocket science. It's not a get-rich-quick scheme. It's a way that you can start living and investing today in your 30s so that you will have a comfortable retirement later. So let's get started. Here's how it works. Imagine two young people. There's Dylan. He earns $85,000 a year, and he contributes $19,000 into his 401k account every year. The benefit, first of all, is that instead of paying tax on $85,000 a year, he's actually only paying tax on $66,000 a year, because that $19,000 that he's investing is going straight into his retirement account and doesn't get taxed. Since he's in the 24% tax bracket, that saves him $4,560 immediately. So imagine this. In 23 years of investing $19,000 a year, at age 55, Dylan's retirement account is worth $1 million. Easy peasy. The assumption is, of course, that he's invested in a diversified group of stock and bond investments, and he earns an average rate of return for those investments. So how do you implement this? Maybe you can't afford to invest $19,000 a year, and you can only afford to invest $10,000 a year or $5,000 a year. First of all, start with what you can. Make sure to invest in your employer's 401k plan, especially if they have a match and they match the money you put in. Next, what do you choose to invest in? Because you'd be surprised at how much fees could eat away at your investments. So choose an investment that has low fees. Ask your plan if you don't know what the fees are. Again, to make it simple, you might want to just choose something called a target date fund, which simply does all the heavy lifting for you and invest in a group of stocks and bonds, riskier when you're younger, so you can afford to lose a little bit if the market goes down one year and becomes more conservative the closer you get to retirement. These funds are great. I suggested my daughter invest in one just last week. If you can swing it, the best way to not miss the money that you have invested is by automating. With your 401k, that money is automatically invested and taken from your paycheck. If you can do this, also open a brokerage account. That's an account at either a robo-advisor like Wealthfront or Betterment, or just at a regular company like Fidelity or Schwab, and have that money automatically transferred into your account. Invest in what are called low-fee index funds, and you can read more about those in this actual article. And here's a couple examples. You can get the entire stock market by investing in one fund, and the fees are tiny. Schwab's total stock market index fund only charges 0.03%. That's 3 cents on every $100 they've invested, and all the rest of the money goes into your future investment account. So, okay, we've covered automate your saving and investing. Really important. If you don't see the money, it's much easier to live on less. And if you're saying to yourself now, Barbara, this is crazy. I can't save or invest that much. What will I live on? Unfortunately, few of us have unlimited amounts of money. So you have to decide the trade-off. Do you want to live a certain way today? Maybe eat more fancy meals, drive an expensive car, and sacrifice your future, your financial future, and have a more conservative financial future? Or are you willing to cut back a little more today so that your later years will be more comfortable? Think of this rule of thumb. Every dollar you spend today, if invested, could grow to $10 at retirement. So when you go to Starbucks to buy that $5 cup of coffee, consider whether you'd rather have the $50 later for that cup of coffee, or whether you prefer to just have it now and spend the $5 today. Let's talk about what you need to do in your lifestyle to make this $1 million goal at retirement a reality. First of all, you need an emergency fund. So you have 3 to 6 months of money in a bank account. Because what you don't want to happen is you have a car repair of $500. You don't want to have to borrow that money from your credit card and pay 10, 20% interest. You may even want to choose to live in a lower cost of living area. When our daughter was born, my husband and I made the hard decision. We left California and we moved back to the Midwest because it was more affordable and we knew we could live on less and save more. Clearly, ultimately, as we got older, we decided to come back after our daughter was gone and live in California again. Consider living in a smaller home or apartment. Drive an economical car. Say no to your kids. They don't have to have everything they want. And these small lifestyle changes can add up to big bucks, money you can save for tomorrow and invest so that you do have $1 million retirement. So in the end, what is the takeaway? Investing small amounts of money regularly, starting in your 30s, in your 401k, you might want to open a Roth IRA account or in a discount brokerage. Invest that money in diversified, low-fee stock and bond funds, and don't touch it until you retire. And if you make those smart lifestyle choices today, you can be reasonably sure that by tomorrow, in your 50s and 60s, you can amass $1 million nest egg to use to make your later years a little bit better. So thanks so much for listening. Please subscribe to my channel. Give me a thumbs up if you like this video. And below, I'll have more money-making wealth tips and even some freebies for you. Thanks a lot. See you next time. Bye.